What's up, YouTube? Today I am back with a special video for you guys. Today was Monday. The markets were closed. We have a 4-day week coming up, and I wanted to bring this video to you today and talk about the importance of creating a trade plan, the components of a trade plan, why we need one, what it does for us, and I will show you how I make my trade plan, and I hope that it helps you going forward. And I will break down all of the points about why I think it's important and how you can do it too. So let's get right into it. So, why do we need a trade plan in the beginning? I'm sure you've heard me talk about it before, but the main ones are accountability, responsibility, and building a measurement tool. So, accountability, one of the main things that's helped me is sharing my pre-market analysis or my plan that I come up with at the beginning of the day with other people. Now, why do I share it with other people and not just keep it in my head? It's going to seem obvious to some people, but if you share it with somebody, you have to be accountable for it. If it's wrong, then it's on you. And that creates a responsibility of what you put out there, you have to be responsible for. And this carries right on to my next point about why you can't keep your plan in your head. You cannot just keep your pre-market plan in your head and think that that's going to serve you. It's just thoughts in your head, airy-fairy. Nobody knows about it except you. And you're not really holding yourself accountable if you're just keeping your plan in your head. You need to write it down, ideally share it with people, but at minimum, write it down, and I'll get into that later, and create your plan at the beginning of the day and as something that you can stick by as you trade. I'll get into that more later. But the reason that we don't want to create a plan naturally and why it's difficult is because if you make a plan and the market moves against it, now that's causing pain because your expectations are different from reality. So the market is generating pain. But the key is we need that pain in order to grow. And when you experience pain, you go back at the end of the day and you journal that. You dive deep into your feelings inside of that trade and you say, where did I go wrong in this analysis? What can I do different? And you make a new plan at the beginning of the next day and you slowly improve. This is how making a solid plan gives you a metric for measuring your success. And over time, you'll see that you get better and better at making an analysis of what you think the market is going to do or where you think buyers and sellers are going to step into the market and how you're going to act on that if and when that happens. So the last point is that building a trade plan builds your trust in your own process. At the end of the day, all we're doing as traders is looking at the market, making an analysis in our head about where we think large money is going to step in, which levels are going to be defended, and then if that happens, we will play in that direction. We'll put on a trade, either short or long, in that direction. And that intuition is what we're building over time. And if you just keep that in your head and you think you're going to build intuition over time, I can tell you it's not going to happen. And you cannot just keep throwing money at the market without a plan. You need to treat this like the $1 million business that it is and take every single trade seriously. And you need to take your plan seriously at the beginning of every single day. So let's get into it. Okay, number one. This is how to make your trading plan. Number one is you need to identify the market conditions and play with them. You need to set your plan up. Remember, everything that I'm talking about here is before the markets open. We're not watching live price action. This is usually what I do the day before the markets open in the evening or right in the morning as I see like half an hour before the market opens. So none of this is reading live price action. This is all just looking back over your charts. But you need to identify the conditions of the market and how the market's been trending. You want to set yourself up so you're not fighting buyers or sellers. And the reason for this is you need to look at the most probable setup. And in an uptrending market, the most probable setup is going to be a long position. And in a downtrending market, the most probable setup is going to be a short position. So you want to make sure that you have all of the probabilities, as many as you can, stacked in your favor. So secondly, you need to identify the direction of the market and only take setups in that direction, like I just said. I will show you a slide in a second, but look for signs of strength and weakness. Look for demand zones getting weaker, meaning that's going to be bearish. If you have a demand zone where buyers previously stepped up and now they're getting weaker and weaker, sellers are probably going to push through that demand zone. And just the same way, if there's sellers in a supply zone that's getting weaker, that means that buyers are going to push through. So these are little cues which you can pick up on in your pre-market analysis and then use that to tell you where the strength of the market is going, where the tide is shifting, and you want to make sure that you set your trades up in that direction. Lastly here, look for clues where large money is entering the market. Sometimes you can see right after market, you just see a massive green candle on the hourly chart. That's probably large money stepping in and entering a large long position. And if they defend that level the next day and it's a big move, there's a good chance that that's large money defending that position that's going to cause the market to trend upwards. You'll see that on heavy volume and strong candles, just like I mentioned. If there is heavy volume with these candles, that can also mean that there's multiple institutions that are getting in at that level. These are all clues which can tell you the tide of the market, which way the tide is going. Is it going in or is it going out? And you want to trade in that direction. You might be tempted to trade against it, even though it looks like a tasty, tasty setup. But I can tell you, even if somebody made money, even if one of your friends made money on it, you need to understand that trading with conditions of the market is going to set you up for the most long-term success. You want a process which is repeatable over and over again. You're not going for the one-off wins that are going to get you 500% in a trade. You want to look for base hits, 40%, 50% daily. You want to be able to do that every single day. So here's an example of what it looks like when sellers are getting weaker. So you can see this green bar on the top. Right here, it's technically a supply zone. So usually I draw them red, but you can see we have a clear seller here. You would think that's large money. Sells, and then buyers defend in this demand zone. Price comes back up to that level. What it looks like to me is that same seller stepped in and pushed price down. So in my head, I'm thinking, okay, there's a seller there. The next time price comes into that level, I'm probably going to take the market short if I see sellers show up. So what happens here is price comes back into that level, and sure enough, there's that seller there. But what happens next is buyers show up instead of down here in their original demand zone. Buyers show up in between zones and push price back up into that supply zone. So these buyers are overpowering the sellers that you see over here on these two peaks right here. So what that is telling me, and especially the price action and pre-market right here, that's telling me that whatever seller was in the market over here is getting bullied out by buyers. Buyers are pushing price up. So when I'm making my pre-market plan for this day on the right here, I want to play with buyers. If this demand zone gets broken, I want to set up my trade plan to trade with buyers. That's what I mean by trading with the flow of the market. If we break these sellers, overpower them, and we push through that level, you play with the buyer. So a perfect trade here would have either been long in the beginning of the day up to this break and retest level, or you wait for price to come down and these buyers defend just like we said in our plan, and you take price up to VWAP. So this is an example of a trade that looks great to take a short setup here, but you need to understand that when you see bullish conditions and when you see sellers getting bullied out of the market, you need to train your mind to look for setups that are with the direction of the market. I hope that made that clear. Okay. Next point for your plan, for your pre-market plan. Number 2, you need to make a bullish and a bearish scenario or outcome. So you need to have 2 options in your pre-market plan. You need to have one setup where if bulls take control of the market, and one setup if bears take control of the market. Now, you might think, well, you're just setting yourself up for success both ways. The psychology behind this is nobody can control the market. You just need to be ready to react to whatever happens. And the setup might look like a perfect head and shoulders. It's never looked like a better head and shoulders. Everything is telling you that sellers are going to step in and price just rips. And I'll show you an example of where that happened. And this is why you need to have 2 plans always. If you have a head and shoulders and you're looking to take the market short, have a level where if price moves up, you're no longer looking at head and shoulders. Now you're switching to your bullish plan instead of your bearish plan. What this does is it eliminates a bias towards one setup. And it causes you to react to what the market is telling you versus predicting. Now, like I said in the last example with the head and shoulders chart pattern, if all you're thinking about is a head and shoulders, you're not going to be perceptive to something other than that plan. Your mind is going to be fixated on anything that looks like a head and shoulders chart pattern, and you're going to be subconsciously blocking out information that's contrary to that because your mind wants to protect you from pain. This is what I was saying before. Your mind is very smart, and it tries to protect you from experiencing pain from the market. And pain is just expectations that are completely different than what's actually happening in the market. And the way you protect yourself from this pain is you have 2 plans, and you say, when one plan is invalidated, now I'm looking at the new plan. And this will leave yourself open to perceive new market information, and you're not stuck in the mentality of an old trade. If it didn't go in your direction, you're able to wipe a clean slate and move on and look at the price action completely objectively just to see what is happening now and how can I take advantage of it. So in your pre-market plan, you need to have a bullish and a bearish scenario, 2 options that you're looking for to happen at the beginning of every day. Number 3, identify critical levels. This might seem obvious, but the key behind this one is you need to draw key areas where you believe smart money will step into the market. It's very important that you put all of your thoughts down in writing where price has to go to invalidate your plan. Like I said before, if we break this level, I'm no longer looking at the head and shoulders chart pattern. Now I'm looking to target the next level above. And that will allow you to take advantage of that opportunity instead of sulking and saying that you didn't see your head and shoulders play out. You're done with that. It didn't work. You move on to the next opportunity and target the next zone. So you need to write things down in your journal like this. Statements like, if we break this level, then I will target the next level up. If-then statements are very, very important in your plan. And the importance about identifying these levels, sometimes they're zones, sometimes they're just a price level. I'll show you in the next slide. But if you think about it, whoever defends these levels, big money, big institutions, whoever defends these certain levels will have a higher probability of controlling the price action about where it's going to go. And if you can see that through them defending levels, now you can play in their direction. Now you know the trend of the market, and it's going to be so much easier playing with large money. And the last point here is the simpler you keep your plan, the more you will be able to adapt in real time. You'll see my pre-market plan at the end of this. I'll show you exactly what I have planned out for Tuesday, tomorrow morning, because I already made it for this video. I will show you towards the end. But keep your plan simple. If you complicate things, involve way too many factors. It's going to be hard for you to switch up your plan if you're wrong in the moment. So just keep it simple, and it'll be so much easier for you to trade in the moment and perceive all of the new market information that's being presented to you. So this right here is the example of the head and shoulders that I was telling you about before. So right here, we have a left shoulder, a head, and a right shoulder forming. This is what I'm thinking in my pre-market plan. So I identify these levels of these key areas of value. Now, this is the right shoulder here. This is what I'm talking about. So right here, I'm expecting sellers to show up, and I'm going to take the market down to either 434 or 432. If I see sellers show up, that's key. If, these if-then statements. If I don't see sellers show up there, if I see buyers bully through there, I'm going to target the next zone. I'm going to target 439, and I'm going to target 443. If buyers power through this supply zone, then I will target the next zone above. Now let's see what happened. This was crazy. This is the area where I expected sellers to come in, forming a perfect head and shoulders to the downside. I was looking to go short here, and buyers absolutely blasted through. So now I'm switching up my plan instantly. I'm saying, okay, sellers have no longer defended this position. Now I'm switching to playing with buyers as long as they keep control of the market. And what happened was we got a perfect retest down to VWAP here. Buyers showed up inside this supply zone, which showed that they were still in control of price, and took it all the way up to the next supply zone. This was a crazy move. And the reason that I think price went so crazy today is everybody was stuck in the bearish state of mind, and they were convinced that the market was going to sell off. And these people, you do not want to be these people. These people could not switch up their plan. They couldn't admit that they were wrong in their first plan and switch up. They probably didn't have a bullish and bearish scenario. I'm willing to bet you that. And I'm willing to bet you that their plan wasn't very simple, and it was a complex plan. They were probably making tons of excuses about why sellers were going to come in. Oh, we can't just keep ripping. This doesn't make sense. This is why you have to play with what you see in front of you. If buyers break this level, then I will target the next level. So this is a perfect example about why you need to make these statements in your pre-market plan and keep it simple. So I just wrote down some points about how this will help you, how creating a pre-market plan will help you. It will help you adapt in real time. You need to make your plan simple so you can adapt to the current market information. And you need to create certainty in your plan. If this breaks, I will do this. It needs to be clear levels. If I see strength here, then I will go long. If I see weakness at this level, then I will go short. These are the sorts of statements that you want to put in your plan. And this will help you switch plans fast if a level is invalidated. Secondly, react, do not predict. The whole point of making these plans is to say, I'm waiting to see what happens at this zone. Not today I'm going to play a head and shoulders before the market has even showed up. You need to wait until you see what big institutions are doing and then play in their direction. Do not marry a setup. That is so important. In that last example, it was a perfect example, but be perceptive to what you're seeing. Don't marry a setup. The quicker you can admit that you're wrong and move on to the next opportunity, the more chance you have of capitalizing on that move and making money from it. So right here is my analysis that I did over the weekend. These are the levels that I'm watching. If anybody is trading tomorrow, Tuesday, June 20th, 2023, these are the levels that I'm looking out for, and I'll walk you through exactly what I'm thinking here. I will pull up my journal in just a second. I'll show you the statements that I wrote down, but I can walk you through that right here. So what I see happening tomorrow morning is we have a break and retest here. We've been in a massive uptrend. Buyers have been buying up every single demand zone, break and retest. We've just been trending up like crazy. And this is the head and shoulders that I was talking about. Massive buying we saw on Thursday. But right here, we have a break and retest. We have a high created here. We broke it. Now we're coming back to retest it. So this is a bullish chart pattern if buyers show up at this level. So we have end of day, which is always a key area of value because there's high volume. So if I see buyers show up at end of day defending this break and retest, and we can break through this break and retest, then I will target end of day from Friday or Thursday's highs. So if we show strength around these areas, then I will target 444 on the S&P 500. That's my bullish plan. My bearish plan is if we see selling around 440 or end of day, then I will take price down to 437. It's literally that simple. That's what I'm looking out for. Obviously, I'm going to learn new market information as pre-market opens up tomorrow morning. But as of now, that's what I'm looking for. And I hope that helps you guys. I will show you at this point. I'll show you my journal and exactly what it looks like. 1 second. This is my trading journal. This is OneNote. I log all of my trades. 6:20, that is tomorrow morning. My pre-market plan for the S&P 500. We are still in an uptrend. I will be looking for opportunities to play with buyers if they show up at critical levels. My bullish plan, if we hold 440, break and retest with strength, I will target 443 and 444. My bearish plan, if we cannot hold Wednesday's highs and end of day, this is a sign of weakness, and I will target 437.20. My goal today is to sit on my goal tomorrow is to sit on my hands and wait patiently until I see smart money defending one of my critical levels. I will not put on a trade if I'm unable to get a good read on price action. If you don't understand what the market is telling you, if price action looks totally bonkers, is not trading according to any of your plan, you do not have to trade it. You only need to take setups that are according to your plan. If anything's confusing to you, don't trade the market. It's going to cause you pain. You're going to make excuses. You're going to trade with emotions. Only trade if these areas are defended, like you said in your pre-market plan. This is why it's so important to evaluate your ability to stick to your plan. I'm going to end with a quote from Mark Douglas. If you do not know what you did to win the last time, how do you know what is going to keep you from losing this time? If you make a plan and you stick to it, you slowly build your intuition in the markets and you start trusting your intuition. If you never stick to a plan and you only keep your ideas in your head, there's no way you can build trust in your process. If you write it down, you have accountability. If it goes wrong, you take accountability for that. You find ways to improve. How can you read price action better? And by taking accountability and responsibility, you give yourself the best chance of improving and improving the fastest if you take responsibility and learn from these experiences. And throwing yourself into the market every single day and taking accountability is one of the best ways you can do that. I really encourage everyone to join a team. If you do not have a team, you're in the perfect place, because this week on the High Performance Trader Discord, which is the team that I'm part of, it's run by my boy Joshua Salvetti at the High Performance Trader. This week only, you can DM HPT, DM myself or Josh, myself, Darren Bowman at Bowman Board of Trade, or Josh, DM us on Instagram for 1 week of free access to the Discord. This is where we chart all of our setups. We do live call-outs for the setups that we're watching. I guarantee Josh is going to be taking a lot of the similar trades. We have very similar trading styles, and this is where we chart all of our progress and go through all of our trades. And for 1 week, you can get access to that for free and watch us trade live. I highly recommend you take advantage of that. Also, go to both of our Instagrams, and there's tons of valuable content there. There you'll see a link to the website, High Performance Trader website, and Josh's YouTube channel. Tons of free content there. You need to take advantage of it. But I hope this video set you guys up well for this week. If you're trading this week, do your best to make a plan, rewatch the video, take notes on how I make my plan, or you can come up with your own strategy. But taking accountability and responsibility for your trades through a pre-market plan has helped me so much in the last month, and I'm sure it can help you as well. That's it for this video. I'll catch you guys in the next one.